Hey there, happy Finance Friday from your hat dude wearing mortgage guy, Billy May, with our president, Capital Partners president, Craig Garcia, who has taken the helm of the podcast the past couple of weeks while I was away, halfway around the world, and
Oh,
delivered some great episodes, some great information. I actually did watch him, Craig, when I was on vacation. So,
that's great. And how was your vacation?
oh, it was fantastic. Of course, I got a new hat. I was in
I like it.
Hawaii. I was in Hawaii, and
Wow,
I don't
very
like to tell
nice.
my referral sources when I go on vacation because I don't want them to not to call me. So
Of
I did
course.
actually answer some phone calls and emails when I was on vacation. But it was an amazing vacation. I lived there when I was in the Navy 30 plus years ago, so it was the first time I had been back since 1993. We went for our Navy reunion. It was really quite special. Toured the USS Missouri, Pearl Harbor. I saw my
Wow.
old shipmates, and I traveled the places I went and ate all kinds of great food. So. And yes, I went to the USS Missouri as well, actually. So, um, but it was great. It was great. But I'm glad to be back. I got to get back in the swing of things and everything, and getting rock and rolling again. And of course, I saw there's some great news, mortgage rates. The Freddie Mac survey came out, and as usually talk about rates, and we talk about what's going on at the Fed. That's news this week, and we're going to talk about a specialty product or program today. But the weekly survey came out. Now we're quarterly weekly survey. We're like below 6.5, right? And remember that info is
Yeah.
from last week. And now we have the Fed
Correct.
meeting this week. So what happened this week?
So yeah, I mean, we had the Wednesday we had a big meeting, the Fed meeting. And Jerome Powell, came out and the Fed cut rates, which we had said, I think going into the meeting, the market was predicting a 96% chance that they were going to cut rates a quarter. And they delivered on that rate cut. And I think a lot of people maybe were surprised to find out when they called their mortgage lender the next day. Hey, what happened? What's my rate today? And they said,
Right.
well, it didn't really improve. And the question is, well, why not? The Fed just lowered rates. Um, and we try to say a lot, that the Fed doesn't control those mortgage rates; they control these short-term rates. And going into a Fed meeting, where everybody was widely anticipating them doing this, that's why rates have been getting better since May. And so, they did what they were expected to do. And then usually what happens is the reason that, yeah, so if they do something that's unexpected, that can lead to rates getting better or worse. In this case, it did exactly what was expected. And then what usually happens is what they say can drive rates one way or the other. And I think and so one of the things that they look at is this thing called the dot plot, which basically the Fed governors kind of reveal their cards and show what they anticipate the future pace of rate hikes or not to be.
Right.
And that looked pretty good at first. So the market, when it first the announcement first came out, rates got better for 10 seconds.
Right. Right.
And then when Jerome Powell started speaking, he kind of painted, because I think that the market first thought, hey, all right, we know there's two more cuts coming here before the end of the year, and they were trying to already kind of bake that in. It's already baked in to some degree, but it seemed like it was more certain. Then Jerome Powell gets into the press conference and he kind of tamps down on that a little bit and says, hey, nothing is for certain. We are really not maybe as concerned about the employment situation. We think that that's pretty strong, but we're going to have to monitor the reports that come out, and everything that we do from here on out is going to be data dependent. So the idea of, hey, we definitely got two more rate cuts coming. He kind of poo-pooed that a little bit, and so the rates didn't really respond, favorably, and so they didn't really get worse. I mean, maybe a little bit,
Right.
but the improvement that would happen when the first release came out quickly evaporated,
Right.
and so if anything, rates are probably slightly worse, but nothing material.
Yeah.
They're just disappointingly not a 0.25% better, which is very common when there's a Fed meeting and a rate cut.
Oh yeah. I mean, remember a year ago. I mean, a year ago they did the half a point right before the election, and it was disastrous for rates. Remember?
Yeah, so what happened was that's right. last September, a year ago, the Fed cut a 0.5%, and people were surprised. And then we had some stronger, employment reports that came out, and yeah, mortgage rates went. In spite of the 0.5% cut, mortgage rates went almost straight up for a
Oh
little
yeah.
while. You know what I mean? So
I remember that. I had people floating at that time thinking, "Hey, a rate cut, rate cut." I was trying to tell them, "Hey, it doesn't always happen that way." And
yeah,
it was painful for some borrowers last September when that happened.
yeah, it was an unfortunate surprise.
Yeah.
And so that the Fed cutting rates is never really a direct correlation. Hey, your mortgage rate's going to come down. The only time that really happens to somebody, if you're listening to this, you have a line of credit, a home equity line of credit,
Right.
um, that rate's going to improve. But your fixed long term mortgage rates, that's going to get set by the bond market and the people who are buying selling bonds, and that's what they feel is going to be happening into the future. So so we have to keep a watch. There's going to be several weeks until the next big employment or inflation report that comes out, and so there's lots of little economic information that comes out in data economic reports, and just have to keep an eye on that and see. I don't think that there's risk for big increases unless some of those reports that are coming out later,
Are really
either paint a
strong.
picture of surprisingly higher inflation,
Right.
surprisingly stronger job market,
Yeah.
and obviously if less inflation, weaker jobs, that could definitely open up the door for, for lower mortgage rates.
Well, I
So
mean, rates below 6.5 is good. We're getting closer to 6. And, if somebody wanted to get an interest rate below 6, you certainly could, maybe paying a little bit of discount points. FHA and VA loan rates are usually slightly less than the conventional rate as well. I mean,
yeah,
you could get it to the fives, which is good. And if we can keep that mojo going, people start getting, hey, I could get an interest rate in the fives. It'd really be good for people's psyche.
absolutely.
And I did read also that I think last week mortgage refinance applications shot up dramatically, because rates
Yeah,
are getting lower. There's people
yeah,
out there that have rates in the high sevens that they got over the past couple of years. And if I can get that 6.5 and get at that's save a point,
sure.
that's definitely something. Especially if you're at a $500,000 loan. I mean, that's a significant savings.
Yeah, the savings adds up. And yeah, so certainly, that's that activity, which has been dormant for the past several years, has certainly livened up recently as far as people looking at refinancing. Yeah, well, we're helping people there when the opportunity presents itself. And yeah, no, it's definitely a good time. I mean, we did a little short video about while you were away, just talking about, if you're a buyer and you really would be a lot more motivated if you could get a rate in the mid fives, you know what I
Right.
mean? Low fives. Hey, there's nothing to say that you can't negotiate that today. I mean, with the way that sellers are flexible because they
Absolutely.
try to make a deal. Hey, you could negotiate a concession and use the money that you negotiate for the seller to credit you at closing to buy your rate down permanently.
For sure.
We've talked a lot about temporary buy downs, but sometimes, hey, if you just take that money, buy the rate down permanently,
Right.
now you've got yourself, you didn't have to wait for rates to get better. You just kind of made it happen now. So
Yeah, and
yeah,
I've seen I got back a couple of days ago. I mean, I've been talking to some realtors and going through some reports and so forth, and there is more buzz, there is more activity with buyers agents showing property in the marketplace that I've seen, which is a good thing. So the inventory and some sellers are lowering their prices. So there's a lot of good mojo going on, so to speak. As
yeah,
far as like for some home buyers, I did check online the e-housing site for the Hometown Heroes product that we have available.
yeah,
Looks like it's being used about $3 million a week, and there's $36 million left. So we could have a few months left of that. It seems like,
yeah.
and those
That's
rates are
that.
competitive. They're
The
competitive.
nice thing if you're in one of those employment categories
Uh-huh.
is that money is not evaporating like it has in previous years.
Yeah.
And so, and that's probably due to the fact that they did narrow it down to the people who for just those employment categories that
We're real
that
hometown heroes. I mean, let's call it
for
what it
hometown
is.
heroes. That's what
Right.
the original program was.
Right.
Oh yeah, so definitely, your police officers, firefighters, doctors, healthcare professionals. There's a bigger list than that, but absolutely, it's a great opportunity, and it won't be around forever, but it's
Right.
definitely not evaporating. If you get in the game now, you're certainly likely to be able to take advantage of that. So yeah,
Yeah, and other specialty products that we talked about, I want to bring up again, Craig, and we mentioned
yep,
briefly, you and I were talking offline, is the the FHA 203K product, and also we also offer the Fannie Mae Homestyle Renovation product, which a lot of people
That's
are
right.
not aware of that. But if there's a house that's sitting on the market, and let's say it needs a roof, and sometimes people think, oh, I can't get an insurance on that property because it needs a new roof, or the bathroom needs to be gutted, or the kitchen needs to be gutted. We have that product, that renovation loan product. That's a fantastic product for the right person, right, Craig?
Absolutely. Yeah. So essentially, you buy the property as it is, and you get the money lent to you to buy the property, and then plus you can get money to do the repairs.
Yeah.
You can get significant money. You can redo the roof, the kitchen, the pool. You have to get a licensed contractor, and the funds are kind of managed by a management company that kind of makes sure that the project goes according to plan, and the contractor has to be approved. But the idea that you could, so now if you're a buyer and you like the idea that there's a lot of homes for sale, but in the area that you want, it's not all the homes are not exactly up to the level of your satisfaction in terms of what it's got and how updated it is. You could make all that happen in one shot using one of these programs. And
Yeah.
so so yeah, and listen, with an FHA to a you could, if it's a $500,000 property and then you want to put $80,000, you can do five. It's basically like you're buying it for 580 and putting 3.5% down on the 580. You're borrowing 96.5% of the house and the renovation
Yeah.
costs, which,
That's
as
amazing.
opposed as opposed to what most people do, they get into the home
Right.
and then they use some other type of credit to to finance some improvements and things like that, and obviously that might be a lot more expensive than what they can get on their 30-year long-term mortgage rate.
Oh, for
So
sure. I mean, people do it all
yeah.
the time. They buy a home, they go to Home Depot, and they finance it. Home Depot gives a line of credit, whoever, it doesn't matter if it's Home Depot. Oh, give them interest free for 6 months or something, and then they jack it to 18, 20% the next year or something. Why not put those renovation costs into something that's a very, very low fixed rate product to amortize over 30 years? It's really minimal.
Oh yeah, no, I mean it's definitely the cheapest way to finance something like that when you're
Sure.
getting in. So yeah, no, it's a great program, great product, and it's not brand new, but not everybody offers it. And I would say traditionally, I would say it was such a seller's market that some sellers wouldn't be. These take a little bit longer because you got to organize the contractor piece, and the
Right.
contractor is needed to be able to do the appraisal. So it takes a little longer. Doesn't have to be crazy amount of time.
Uh-huh.
But sellers were like, I don't want to be involved in that. But today, hey, they're definitely more open to, to different situations that would allow the buyer to buy their property. And especially if they're buying their property as is and not asking them to make repairs because they're going to do it.
Right.
Yeah, it's a much more forgiving market for that type of a scenario to work.
Absolutely. Yeah.
Yeah.
Yeah, good stuff. But
So
we've closed those loans in the past, and you do mention FHA. But we also have that Fannie Mae Homestyle Renovation, which I believe is good for primary homes and second homes, I believe, correct?
We can even do it on investment
We can do
properties.
it on investment properties. Okay.
Yeah, yeah,
Yeah,
yeah,
yeah, really, really great stuff. So if you're a referral partner out there, you're a realtor, if you have a listing that has issues,
that's right.
call us here at Capital Partners. We'll explain to you more in detail this renovation product. It's a magnificent product, and we've done those in the past, and especially for like roofs, bathrooms, kitchens, really, really cool stuff.
Absolutely.
Might help you get more money for your seller if you offer that product. But
That's
all
it.
right, sounds good, Craig. Well, happy Friday. I hope you have a great weekend. Um, and
You
I,
too.
I guess we will always close it as we say. We're going to see you
At the closing table.
at the closing table. Any closing comments, Craig? What else you got for us?
The good news is I have my Sundays back now because I really don't. There's no really need to watch the Dolphins anymore. So it's
Ah,
we're 0
brutal.
3. It is what it is.
They were in it
And
last night.
so
I watched it to the end. They were actually in it. They might have
I
actually
know,
could have
I
won
know.
that game.
I say that I'm still gonna watch. So I'm
Yeah,
glutton for
well, it's in
punishment.
our DNA. You and I are both native South Floridians, and we harken back to that day when they were a competitive product. But let's face it, they've been in the toilet for 25 years now. I mean,
It's been rough. I mean,
it's
and
nearly half our lifetime, Craig. I mean, come on.
I know, I know. Back in the day, we had Marino, and listen, I'm Team Tua. I like him. I hope he doesn't get hurt, and he's fun to watch. Um,
He is.
so
Yeah.
so that's it.
Well,
So
we got the Hurricanes, and
possible
we got
one.
the Seminoles. That's gonna be a good matchup coming up pretty soon here.
That I'm excited about.
Oh yeah,
That's gonna be a fun game to get up for. So yeah,
yeah,
that's in a couple weeks.
yeah,
So
exactly. So, all right, good stuff. Well, have a great weekend. Then we'll see you again soon. All right, take care.